Welcome to Beyond the Press Release, a production of Agoracom in which we take time to speak with small cap executives about recent important news at their companies. With us today, I'm happy to have for the first time Darren Collins. He's Chief Financial Officer at Namaste Technologies. The company trades on the stock symbol N, that's the letter N, as in Namaste in Canada, and for our friends in Germany on the stock symbol M5BQ. You can find them on the web at namastetechnologies.com. Now, for those of you that are new to the story, Namaste is a fast-growing, revenue-generating company that's emerging as a leader in the global trend towards vaping, and we'll get to more about that when we speak to Darren. But more than just lip service, the company is the #1 vaporizer distributor in Europe. It owns over 30 e-commerce stores in 20 countries. The company is aggressively expanding into manufacturing and wholesaling, and most important of all, the company now has an annual revenue run rate of about $6 million US, thanks to an acquisition that we're going to be talking about today. Darren, welcome to the show.
Thanks so much, George. Pleasure to be with you.
All right, so you guys announced, I'm going to read the headline here, so forgive me for reading, but I want to make sure I got it right. You guys announced the other day, Namaste closes acquisition of Vapor Cellar. Tell us what this means to the company from a strategic point of view, why this acquisition was so important.
Sure, George, great question. So really the strategic importance of the acquisition that we closed on last Friday is multifaceted. Essentially, entrance to the U.S. market. Our business pre-acquisition was very international. The majority of our sales coming out of the U.K. and continental Europe. The U.S. is the largest market for these products. It's an important market for these products. A lot of the manufacturers, distributors, etc. are based in the U.S. So we initially started the company international, developed scale there, and now we've come back into the U.S. market to pick up that piece. So, post this acquisition, we have a great presence in the U.S. We have great partners in the U.S. So that's the first that I'd mention. The second strategic rationale on this particular transaction is it scales our business. As we scale our business, we'll, get better valuation, our access to capital will improve, our, breadth of distribution will improve, and, ultimately our ability to get preferential pricing terms from manufacturers. So with scale comes, additional strategic benefits on that basis as well. The next piece that I'd point out is, it really expands, and this, relates to scale as well. It expands our customer base by 150,000 names plus.
Big number.
That is a substantial number of names, and, really the core piece of what we acquired with this transaction. That enables us to distribute our own products, Hayes's products, or, the products that we're picking up with Vapor Cellar, as well as, launch and distribute new products through that distribution channel in the US as well. So, substantial benefit there. The other piece that, was really a great fit for us. The principals of the company that we purchased Vapor Cellar for have actually been joining us here as consultants, actively involved consultants, very smart guys, Georgia Tech graduates out of Atlanta, in terms of their expertise in predominantly engineering, computer science, and in business management. Some really fantastic guys we've brought onto the team here as well.
Let's talk about the financial side, because that's obviously incredibly important every time you make an acquisition. This is no small acquisition. The company comes with substantial revenue. So what does it mean to Namaste going forward on the finance side?
Well, another good question, George. When we looked at the transaction, we looked at obviously our own valuation. We looked at what would be the ideal structuring model for Namaste on an acquisition strategy, and this is something that we intend to do. Going forward, we plan to buy more companies like this. There's a great opportunity to do so. We can dive more into that in a moment. Really, transaction in our mind set the precedent for what we want to do going forward. We're a public company, so when other companies that we're looking to buy and investors look at this, they'll say, okay, well, that's the first one out of the gate. We can expect to see more kind of this model going forward. So the way that we looked at it was, okay, the seller's going to want a certain amount of upfront cash. We want to try and limit that as much as we can, but they're going to want some. Second, we took the company public on a basis that we'd have a currency to acquire companies that we very much have a first mover advantage on. I would say there's really not a company in the public space right now that has a comparable business model, sales, et cetera, in the hardware portion of what, would certainly be a peripheral play on, recreational and medical cannabis and, other related products. So, 2, we said, okay, some amount of stock. And then 3, we wanted to really, for lack of better terminology, hedge our bets. And, the best way to do that is to have a form of earnout, or a form of what I would characterize as contingent, unsecured, non-interest bearing liability or debt associated with the transaction.
That's the way a CFO would put it.
Yeah, well, there you go. But really, at the end of the day, I say contingent because it's completely dependent on both revenue generation and margin. So contingent, if the margins aren't there and the revenues aren't there, then we're not paying, so that protects our downside. If it's not secured, there's no general security agreement or anything like that. So it's obviously not like a senior debt facility or anything like that, and it's non-interest bearing. We're not paying any interest.
At the end of the day, the company's got to deliver. They don't.
Exactly.
If it doesn't deliver, they don't get paid. So that keeps. I think that's great protection for shareholders.
Yeah, and it's 60% of the deal price, right? So effectively, I mean, we've structured it really like a private equity deal in many ways, like you would a leverage buyout, and that the cash flows generated from the business fund the earnout over a 3-year period. So we've matched that up nicely, and that will be at the end of that 3-year period, a substantial asset that's paid in full and is essentially 60% of it financed on its own basis, on its own cash flow generation. So, in terms, that's the structuring part of it. The terms part of it, the $500,000 cash on close, 5 million shares to the company, and a $1.5 million earnout. When you add all that up at a deemed value per share of essentially where we're financing right now of 10 cents US a share, about 13 cents Canadian, you get an all purchase price of $2.5 million. The business right now is doing about 4 million run rate. That's kind of where we anticipated coming out this year. They did 3.4 in 2015. Obviously, we're looking for some growth there. So, if you crunch those numbers quickly, 2.5 over 4, you come out at just a little bit over 0.6 times revenue multiple that we do for this business. We were trading at 2.5, 2.3 times pre-announcement of this deal. So massively accretive to our share price, and really in my opinion, would do deals like this all day long. We certainly look to do more, and something that is very much in the interest of shareholders in terms of building incremental value per share. So that's really the kind of the financial aspects of what we've done here.
Let me go back to the basics for a second. So people at home have been listening to and watching two things. First, the strategic side, U.S. market, 150,000 new customers under your belt. On the revenue side, on the business side, you talk about a company doing $3.4 million U.S. in revenue. So this is very substantial. But a lot of people are probably still asking themselves, okay, what is vaping exactly? So I want to make sure that they're hearing this fantastic story. So in the small cap world, that's exactly what you want to hear. Products, customers, revenue. Let's make sure people understand the core product. In about a minute, give us a layman's overview of what is vaping and why is it going to be such a growth space for years and years to come.
Well, another fantastic question, George. Really vaping is, to be compared to, what has been smoking or combustion of plant materials or substances. The difference being in my mind, and the way that I always characterize it to people, is that vaporization of a substance essentially means bringing the temperature below the point of combustion. So you're creating what I would refer to as a vapor or a mist than inhaled by the person actually consuming the the product. So, that's really the differentiator in my mind. It's really the temperature at which you're, consuming various items. Smoking obviously is, something that releases a bunch of, carcinogens. Vaping is, believed, very much to be, a healthier alternative to that, and is really an effective way to, a really effective way to intake, various things such as medical or, recreational cannabis. The differentiator that I'd also mention is that, there's really two parts to the market defined. There's kind of your e-cigs part, which is more liquid nicotine, and then there's really your dry herb vaporizers used for more cannabis and herbal products. We're in the part of the market that really deals with the dry herb vaporizers, so we're not really working in e-cigs at this point in time. And strategic decision on our behalf, and really the part of the market that we're addressing is the higher growth portion. In our opinion, we have numbers to support that. The best numbers that we have estimate the market being $2 billion in 2014 and expanding to $22.5 billion by 2022, north of a 30% compound annual growth rate. It is a market growth chart like few I've ever seen, and those are very credible numbers out of a large U.S. bank. So just on that basis, we see it as the right segment of the market to be addressing, and certainly the potential for margin and everything of the sort is excellent there as well.
And before we go on to the next question, I want to add for everyone at home, I know Darren's mentioned recreational medical cannabis. That's definitely one strong application, but I went online myself to look this up as well. It's amazing that the top 10 uses recreational medical marijuana aren't even in there. You've got herbs, you got things like chamomile. So people are really using vaping in order to make their lives better and healthier. So I want to make sure I kind of added that in there.
That's a great point there, George. We market ourselves in the online community as strictly an aromatherapy company. Now, what people ultimately use our end product for, is subject to what the user desires to use it for. But we do go so far as to sell things like chamomile, eucalyptus, mint, which have health benefits from vaporization as well. And there's certainly a lot of other products out there that you can use vaporizers with as well. And it's really an industry that's evolving at a rapid pace in that respect.
So Darren, clearly you guys are growing, the industry is growing. You gave us those fantastic numbers. How ripe is the industry for consolidation right now, and what kind of role do you guys see Namaste playing in that?
Well, back to what we were discussing a moment ago. Namaste really has a first mover advantage in terms of a consolidation play within the industry, in addition to our organic growth, where we certainly see great prospects as well. It's an industry that by and large is fragmented. There's a number of players. It's very high growth. The dominant player in the industry right now is a company called Vape World out of Boca, but still in terms of majority market share, they're not even close really. So the basis of fragmentation, high growth, management expertise, essentially positioning us as a platform with a first mover advantage, it's the perfect scenario for consolidation, and really underpins one of the core reasons why we took the company public.
Last question. I'm going to play devil's advocate here. Acquisitions and mergers always sound great on paper, but they're difficult to integrate. They're difficult to match and bring together, find the synergies, find the savings. How are you guys going to be able to A, integrate your latest acquisition, and B, integrate future acquisitions? Do you have the manpower necessary at the end of the day? And I got to ask that because that's the difficult thing in the small cap world.
Another great question. Yes, we do. Our CEO and president, Sean Bollinger, is 15 years e-commerce experience, knows these systems, inside and out. One of the things that we really invested in pre-go public was putting the right systems in place, and those are systems including Linworks, Shopify, great Canadian company. These systems really ability to integrate other software packages, move over the data, and at the end of the day, this is e-commerce, so it's a very scalable business. Where we can bring in, as we've been discussing, an amount of sales that a company like Cellar, a platform like Cellar is producing, and implement that without really having to build out a lot of additional staff. For the integration of this particular acquisition, we'll bring on an additional 3 staff members to help with admin support, with packing, with shipping, with some on support, and then obviously we have the Hayes team staying on as consultants during their earn-out period. So really on that basis, it's been quite a good transition so far, and a lot of feet on the ground in our operations down in the U.S. ensuring that this goes well. So that's really what makes these acquisitions Nothing's ever easy, but efficient and quite manageable to integrate. The other one that I'd point out to you, George, is just in terms of our ability to execute on these transactions, and we've covered the integration side there, but really when I look at the skill set of our team, we have the better parts of a private equity or an investment bank within our organization. My background, I've worked for investment firms, a merchant bank, investment bank here in Toronto. I spent some time over in the UK working in the City of London for a mid-market investment bank. Most of our clients were blue chip telecommunications companies while I was there. So great background in M&A on my side, and debt and equity. Sidney Himmel, our chairman, 35 years in capital markets, advised extensively on this deal. It was really a good set of eyes to be reviewing all the transaction document structure. Was a massive assistance in terms of executing this deal. Our board member and legal counsel Peter Simeon, fantastic securities lawyer, M&A lawyer, partner at the second largest law firm in Canada, Gallings. A guy that I've worked with for probably the last 6-7 years, very much in sync. Again, fantastic lawyer. And then Sean, who's obviously an e-commerce expert, integration, strategic fit, vision of, where the pieces, come together and what it means for us as an organization. So, really from, financial capabilities and, operational capabilities, the ability to integrate, we really have the box checked on that basis. Well, I think the other point to make on this is, when you look at the backgrounds of the people involved, I mean, we've all done, billions of dollars worth of transactions. If you added it all up, I'm sure it's, multi billions worth of, notional transaction value. For, that talent to be in a company the size of Namaste, is certainly interesting on that basis as well. I think, we all share in the vision that this is a fantastic industry. It's a great collection of, skill sets. And, we're early. We're at the inflection point of the growth curve. So, really in my mind, it's the perfect storm on that basis. Again, management, industry, business model, and then, financial execution. So that's, reflected obviously in the fact that, today we're a small company, but the people around the table have certainly built big companies. And, that's the basis of where we see a lot of potential going forward.
And we'll leave it at that. Small company on its way to becoming a big company. You've got the revenue, now you've got acquisitions, you've got the organic growth on the street level, you got the team. Darren, we could talk, and most of all, probably best of all of that is you got this explosive industry in which you guys are early movers. So we could probably sit here and talk for another hour. I'd rather have you back on again and again in 2016, as you guys undoubtedly look like you're going to be putting out more and more news and great development. So thanks for joining us today, Darren. We really appreciate that you took the time in your day to kind of sit down with everybody and talk about the importance of this acquisition.
Well, appreciate your time as well, George, and look forward to speaking again soon.
You've been watching Darren Collins, who's Chief Financial Officer at Namaste Technologies, Inc. The company trades on the CSE in Canada on the stock symbol N, as in Namaste. For our friends in Germany, under the stock symbol M5BQ. You can find the company on the web at namastetechnologies.com. And of course, get over to Agoracom, punch in the company's name or stock symbol. Take a look at the previous interview that we've done with Sean and other great information. Thanks for joining us, everyone. Hope you discovered another great company today. I know I have, and we'll talk to you next time.